Good afternoon, everybody, and thanks for coming this afternoon to talk about this important tax credit for seniors. So the senior circuit breaker credit, people say circuit breaker, what's up with circuit breaker? I wish we could just call it the senior real estate tax credit, then people would know what we're talking about. But circuit breaker, the person that developed the concept, they use the analogy of an electrical outlet. When it's overwhelmed or burdened, the circuit breaker is in place to provide some relief for the burdened outlet. So with real estate taxes, seniors generally are on a fixed income, and we realize that our real estate tax seems to increase every year, and we're on a fixed income. So that's kind of a tough, sometimes it makes it a little bit burdensome for folks. So the first criteria, we know we need to be 65 or older by December 31st of the tax year. If you are married and file a joint return with your spouse, as long as one spouse is 65 by December 31st, then that's okay. All you need is one by 12/31. There's some income eligibility we should talk about also. So for the single taxpayer, your total income, your gross income needs to be less than $57,000 last year. If you're married filing jointly with your spouse, your total income has got to be less than $86,000. Some folks file as head of household. They have a dependent person living with them where they provide more than 50% of their financial support. And that qualifying income is $72,000 last year. The maximum credit is up to $1,080. Not to say that everyone's going to get $1,080 because you're over 65. Everybody has different income and everybody pays different real estate tax. And it's kind of a combination of the two. The calculation is really easy, very straightforward. People should have kind of a general idea of what your total income is like. If you were to bundle, maybe if you're receiving Social Security or if you have some type of pension, if you have bank interest or a distribution from a pension and IRA account, something like that. So you would put all your income together and take 10% of that amount. So that's half the formula right there. The other half of the equation is to take the real estate tax that you pay the town, and you're able to add half of your water. Do you have sewer in town, or is it some places not so much? Okay.
Water.
Okay, you have water, right? We're happy with that. Thank God we've got water. So we're able to add half of our water bill together with our real estate tax. By adding half our water, it's able to kind of boost up the credit a little bit. We're trying to make it more beneficial for you. So this credit is in place when your real estate tax together with half of your water bill exceeds 10% of your total income. So I could use an example maybe to demonstrate. If my total income last year were $40,000, we know 10% of that is $4,000. Once my real estate tax and half my water bill is greater than $4,000 in this example, then the credit is in place, working for me, trying to help me out to defray my state tax. And again, the maximum credit is $1,080. This is a refundable credit. And what I mean by that is usually most tax credits, if you get the credit, we always apply it towards our tax liability to hopefully bring our tax liability to zero. And usually once you wipe out your tax liability, that's usually as good as they get for most credits. Circuit breaker goes a step further. So even if you're able to wipe out your state tax, if you have a remaining credit, you'll get that refunded. Some folks even say to me, I don't have a state tax liability because I'm collecting Social Security, which the state doesn't tax, or I'm on a public pension, I'm a retired school teacher in town, or a retired police officer. Those public pensions are not taxed by the Commonwealth of Mass, so some of those folks don't even have a need to file a state return, but that doesn't mean that they're not eligible or to receive the credit. So when you do the calculation, if your circuit breaker credit was going to be $500, we'd say, but you don't have a state tax liability, you'll have that $500 refunded in full. We'd be happy to send you a check, or we could even put the money in your bank account. The only way to get the refund, though, is to file the return. If you don't file the return, you won't receive the refund or the credit. So tax people have a form for everything. We do have a form specific for circuit breaker. It's called Schedule CB. Schedule CB, copy in the book, or if you use software at home or with your tax professional, those packages have the schedule as well. The schedule is where you do the calculation. How much credit am I eligible for? Am I going to get a $300 credit, a $750, maybe the max of $1,080? And some folks, when they do the calculation, it turns out that they're not eligible because the numbers just don't work. Because their real estate tax and half their water bill is not greater than 10% of their income. Okay? Any questions on that? So it's pretty straightforward, easy, right? Renters are eligible as well. as long as the renter is not living in any type of subsidized housing, whether it's state subsidy or federal or even a nonprofit that doesn't pay real estate tax, those folks would not be eligible for the credit because it's understood that they already have a benefit at a reduced rent. Okay. On my handout, you can see that not only do we have the numbers for 2017, but the prior 3 years are available as well. I like to call them maybe the open periods. So the prior 3 years, 2014, 15, and 16, you can still file for those, that amount. A lot of times people just learn about the credit for 2017, and if you've been 65 for the past couple of years, you're able to go back the prior 3 years as well. So 2014 is a little bit time sensitive because, again, it's 3 years from the due date of the tax return. So we know April 15th is kind of rapidly approaching. If people were eligible for 2014 but didn't file or send in the return to get that credit, they will miss the opportunity if they don't file by April 15th for 2014. Okay. Any questions on that? Okay, pretty straightforward. This credit's been around since 2001. But again, the only open periods right now are just 2014 through 17. So I know you have septic here in town. I can talk a little bit about a septic credit. The state also offers a septic credit aside. We're going to segue and move away from circuit breaker, and we'll talk about the septic credit. If you need to replace your septic system or repair because of failure, or you need to tie into a town sewer line if you're mandated to do that, the state offers a septic credit. Anytime we talk about septic, any of that work is pretty expensive. The state is going to allow you to take the first $15,000 of expense and take 40% of your expense up to $15,000. So it's not unusual. It's not hard to reach the maximum of $15,000. We'd say 40% of $15,000 is $6,000. You have 5 years to utilize the $6,000 credit. You can only use $1,500 a year. There is no age limit. So like circuit breaker, we know that you have to be over 65. With the septic credit, there's no age requirement at all. With the septic credit, it's not refundable. So septic credit has to be applied against a tax liability that you would have. So you'd have to have some type of tax liability with the Commonwealth. And again, you can use up to $1,500 per year towards that tax liability. The remaining credit would be carried forward, and you have a total of 5 years to use that.
Yes, does that have income limits, the septic?
There are no, okay, good question. So what, do we have, are there income limits for eligibility with the septic credit? No, there are not, no.
And for this income for the circuit breaker, is
Yes.
that gross or is that your net?
Okay, another good question. So when we talk about the income eligibility amounts, we mentioned if you're single, your total income is going to be under $57,000. Married jointly, under $86,000. Those are gross income amounts, not net, but gross, including Social Security and other things that the state doesn't tax that might not show up initially on the return, but you'll find that when you do the Schedule CB, you're going to add those amounts back in to get a true picture of your income. Other questions that we might have? Okay, sure.
Back on the septic credit.
Yes.
It's me personally.
Okay, good.
I'm replacing one right now.
Okay.
Failed Title V. You said it was 40% of
Of your expense, of your total expense,
total expense.
but the maximum expense that we're going to look at is $15,000. So if it's going to cost you $12,000 to do the work, we'd take 40% of $12,000. It's probably not unusual that you would probably exceed the over the $15,000. It's not unusual. So we'll look at 40% of $15,000. That's as high as we'll go, which would generate a $6,000 tax credit. And again, that credit needs to be spread out.
Over 4 years then.
Generally 4 years. People can use it in 4 years. You have an extra fifth year if you're able, if you had a remaining credit in year number 5 that was unused in the first 4 years, you could use it in the 5th year. You can apply $1,500 a year of the credit towards your tax, but again, you have to have a tax liability in order to utilize the credit.
I will, yes.
Okay, okay. Well, I'm glad it worked out for you. That's good.
I was totally unaware of that.
Good, good, good.
This is worth your trip here.
Yep.
It sure is.
This,
$100.
within the tax booklet, in the instructions, I'll show you where this talks about filling out the Schedule SC for septic credit. And then also on our website, which I'm going to give Katie a copy of the handout, which provides the website and the 800 number, that if you wanted more details or more information, that you could get that from us. So again, because we have a form for everything, we do have a form Schedule SC for septic credit. That's where you're going to do the calculation. Other questions? Okay, so pretty straightforward. I want to thank you for your attention, and I want to thank Senator Ross for inviting me here to speak about this today, of course. Thank you.
And it was just perfectly 1 cup of coffee.
Excellent.